Hey gang, it's David coming to you with a market update. We've just had yet another, we'll just call it a rough day of the markets, right? We're officially in bear market territory for both the S&P 500 and the NASDAQ. And the reason I'm sending this video out, one, people are starting to email, and as much as we've been talking to many of you, not everybody, I don't want to sugarcoat this. The market is, in fact, it's pretty rough right now. We've seen peak to trough over 20% declines from the top down to where we currently are. And so that's what we would call an official bear market, right? So 10% is a correction, 20% is a bear. And why am I doing this now? Well, believe it or not, I think there's some signs that we should start to get optimistic. And I want to tell you a little bit about some of the things that we have done, because many folks are starting to go, oh my gosh, will I have enough time to make this back up and so forth. So let's go through a few things real quickly. First, I'm going to flash something on screen really quickly. All I want you to see is where the lines are, and notice that we're starting to get close to a bunch of lines. You don't need to know where this comes from, but essentially this is like a look back machine, right? If we were to look back at former price history, see where the markets have been, this is where a lot of people will look to potentially start accumulating again for institutional buyers and so forth. So they're going to look at prior pricing and history. And so that's just a point that we're getting to where maybe there could be a foothold where people want to start accumulating at these prices. Now, that being said, let's just talk about where we're at. Personally, I think that the fact that we've formally hit a bear market is not a terrible thing. It's not fun to go through, I get it, but sometimes we need this from a psychology perspective. It's as if a self-fulfilling prophecy has to finish or people can't get out of their system, right? So we have to have this bear market, right? We're due. Well, I got news for you. It's happened. So if we were due, it's official now. Now the question is, what happens from here? A couple of the things people tell me that they're concerned about. One, if they're in or near retirement. Hey, do I have enough time to make this back up? The short answer is sure. Markets can recover very, very quickly in some cases, and they historically always have. If you remember what happened back in March of 2020, when COVID was announced and everything got shut down, markets fell like 35% almost, and then they went on to be up 15% by the end of the year. So an incredible swing in the market. So it's absolutely possible that ground can be made up quickly. Do I think it's going to happen that way? Probably not, because a lot of that was done on money printing, and we're now finally paying the bill for that. But do I think it's possible that companies will go on to be profitable, that our entire financial system is going to collapse and it's the end of the world? I don't think that's the case. So I want to encourage you that I think it's unlikely that the whole system's going to fail. And the good news is, if the whole system fails, your money doesn't really matter. I mean, if you put it in your mattress or you put it in a savings account, who cares? The dollars are worthless, right? So that's not the best way, in my opinion, to play this. It's not a statistically good way to play this. What is, I think, a statistically good way to play this is to be patient and look for buying opportunities. Now, this is where I want to share with you, especially for our investors that are a little bit more aggressive. We, a couple of weeks ago, took positions. We did this earlier in March, if you recall. We actually sold out of the market, and then we bought back in because it looked like there may be a bounce. Markets did go back down further. We liquidated a couple of weeks ago, roughly a third of the positions, between 20 and 30%, depending on the sub-strategies that we're managing for you. And so we are looking for two things. One, better bargain pricing right now, and two, new leadership in the market, because we think some of the things that brought us to this point won't be what take us to the next point. So that's part of the job that we do for you. So just know that we're on our toes looking for opportunities right now. But we still don't know what's going to happen. I'm not prepared to call the bottom of this market, nor am I prepared to predict the future. This, on a day-to-day basis, is literally a coin flip. And anybody that tells you that they can predict the future is either lying or cheating, both of which are a problem, right? So we don't have access to inside information for that stuff, so I can't game it that way. But I can tell you that, historically speaking, you need to be in the market in order to be profitable in the market. And so we don't want to throw the baby out with the the baby out with the bathwater, right? Boy, maybe take that out in the edits. But anyhow, we want to make sure that we're still focused on investing first, trading really not part of the equation. So position sizing, yes, being in the right spot to capitalize on a recovery. And again, I just want to encourage folks that I think we hit a significant psychological level with an official close in bear market territory. The only major index that hasn't gone there so far is the Dow. So I'm not suggesting it's fully over, but again, the signs are a lot better that we're nearing the bottom of this. And some of the reason I think that's true is because we're getting a lot more panic, right? And that's usually the sign right about the time everybody's exasperated and says, get me out, I can't take it anymore. It's a good sign that we're getting close to the end. So we'll see where it goes from here. We will watch the Federal Reserve, we'll watch interest rates, we'll watch the markets, we'll watch all the different things that give us cause to pause on this one. But just know we're not asleep at the switch. As always, if you have questions, concerns, or otherwise, give us a call. We are not hiding from this one. We're actively engaged, and there are a lot of reasons for why we're doing what we do. But that's the summary for now. A little bit long-winded, but hopefully this gives you just some peace of mind that this too shall pass. It's going to be okay. For our more aggressive investors, we've already taken positions to move you to a little bit safer positioning, and we're looking for opportunities. For our more conservative investors, you really probably should be sleeping okay because we've weathered the storm pretty well in the conservative investments. So that is the story. If you need anything else, numbers and contact information on screen. And if you've got any friends that are nervous or whatnot, and they're worried about how much risk is in their investment strategies, please pass this video on to them so that they can get a second opinion if they need additional help. So that's it for now. Till next time, this has been David Littlejohn on one heck of a day in the markets, but hang in there. We're going to get through this. Thanks, guys. We'll see you.